Hey guys, welcome back to another week of Mortgage Management Minutes. Again, I'm your host, Brent Rasmussen, owner of Mortgage Specialists. Here this month, in February of 2024, Mortgage Specialists has now been in business over 20 years, and I've been lending myself over 24 years. So these videos come to you with many years of experience, knowledge, and expertise, and that's what we enjoy, is helping out our clients and people do what's best for them. And just as we've stated before, I would only recommend something on and for a client that I would do myself. And so today is a big discussion because we see lots of outside input again coming in on this discussion. And it's really pretty easy to break down, which is mortgage points explained. How and when should we buy down your mortgage rate? As rates creep up, usually always what comes in from the outside is, hey, just buy down your rate and everything will be good and you'll get a cheaper payment and everything will work out correct for you. I would tell you that's not always the case. Over the last 20 plus years, I would say we very rarely advise individuals to buy down unless we know they're going to be keeping their loan for a long time. So let's talk about what buying down means, what points mean, what we're talking about here. Okay. So what most people know are you can use extra money to give to a lender to take on a cheaper interest rate. Generally, those extra monies are calculated in points. And that's an easy terminology for us in the industry to use. And point is 1% of the loan amount. Do you always break down the buy down in 1% exactly? No. 1.0% is 100 basis points. We can go from 0 basis points to 300 basis points or 200 basis points to buy down your rate. If that gets complicated, don't worry. We'll keep it simple and explain it in exact terms here just in a minute. So every day, rates go up and rates go down. But there's not always ever a perfect interest rate where there's no points. There's sometimes interest rates that give you credit off the closing costs, and sometimes there's interest rates that cost you money as an additional closing costs. And we're here to kind of show you how that math works. So technically in a normal market, let's just say if an interest rate's at 7%, in order to get to 6.875, which is the next rate below 7%, generally mortgage rates go by 0.125%. So we have 7, 6.875, 6.75, and so on and so forth. Generally, when the rate goes from 7 to 6.875, that costs about a half a point, which is 50 basis points. Okay. So we'll chat here really quickly about how the math works. For an example, if we're borrowing $300,000, 1 point would be $3,000. Okay. We're following that math. 1% times 300,000 is $3,000. So if I had a transaction at a specific $300,000 loan at 7%, a payment on that loan is 1995.91. 1995.91. That is the payment. So if I gave the lender a 0.5%, so $1,500, which is a 0.5% of 300,000, my payment now goes to 1970.79. So I've now spent $1,500 to lower my payment $25.12 a month. Why do we need to know that math? Because what we're really trying to calculate is how much are we saving in relationship to how much it costs us. So if we got to buy down and it costs us no money to get a cheaper interest rate, it's a no-brainer. But that doesn't exist. They're going to charge you money in the secondary market to get a cheaper interest rate. So for example, in this example, at $300,000, if we go down 0.125 an interest rate, it costs us $1,500. So what we do to figure out, does that really make sense, as a very practical, simple math terminology, we take the $1,500 cost and we divide it by 2571, the difference in payments, the 2512. The breakdown of that, 1,500 divided by 2512, is 59.7 months, just about 6 years. So if you're going to keep that loan for more than 5 years, you go ahead and buy down that particular rate. If you think there's an opportunity for you to not have that loan in 5 years, whether you refinance it, pay it off, move and sell your house, something or another, it doesn't make sense to pay the points and buy down that interest rate. So every loan amount is different, and every day the costs for these interest rates change. Obviously, if you borrow $500 or $1 million, the break even should be a little bit quicker than it would be at $50,000 or $100,000. But does it always make sense to buy down? It just depends. It depends on your situation. I can say during COVID, when rates were 2-3%, some people said they're going to be in the house for 20, 30 years. Well, then if we know that, we can math into that particular buy down. Right now, buy down is kind of a little bit more challenging as we look here this February, March, April timeframe of 2024, because rates are higher than they were, and we're possibly seeing rates going to come down. So if you don't keep that loan for 5 years, you wasted $1,500. So buying down doesn't always make sense, and we see that happen a lot from friends, families, professionals in the industry stating, let's look at a buy down. Let's look at what that does to assist. And I would tell you, generally, much of the time, people don't know what they're doing 3 to 10 years down the road. And that's generally where that break-even time frame is at. And if you don't know exactly what you're going to do, it's a gamble. Everything we do is a gamble. Is it worth the time and the effort to pay that extra money? And are we going to get that return back? Generally, what we want to look at, to get really crazy specific, if we look at amortization schedules and see what kind of time frame is there to make that happen. Because if we turn around and made a very similar higher payment at the same loan with the cheaper interest rate, yes, the principal is going to get paid off a little bit quicker. So every financial situation is a little bit different, but doing a general buy down can make sense, and it also cannot make sense. And not to confuse you, my point here today is just to say, do the math. The math doesn't lie. Always have an individual look at it that knows how to calculate discount points, rates, payments, and find out if that makes mathematical sense for you in the long run. I hope you learned a little bit more about buying down permanently, points today, and how that cost, it turns into a break-even time frame. But we're here each and every week. If you would love more information each week, we're here to provide education. Hit that subscribe button below, and we'll see you here next time. Again, I'm Brent Rasmussen, owner of Mortgage Specialists. You can contact us anytime at 402-991-5153 or check us out on our website at mtg-specialist.com. Have a great day. Mortgage Specialists. Driven, trusted, reliable.